Hey, what's up, y'all? It's your boy Street, back at it again. Uh, Today I'm going to highlight some investment strategies for investing into the cruise industry. And the three companies we'll be talking about will be Carnival Cruise Line, ticker symbol CCL, Norwegian Cruise Line, symbol NCLH, and Royal Caribbean RCI. So I recently did a video similar to this with the airlines, and so this video will be similar to that, giving people kind of a different spin on how to know when the price is going to go up when there's not a lot of information coming out or it's a lot of bad press coming out. So just like the airline industry, the cruise line industry right now has been devastated. Cruise travel has come to a halt. Although they say some cruise lines are trying to get some cruises back online and some routes back going, the industry has pretty much been devastated. But the cruise industry has been able to raise money similar to the way the airlines been using it. They haven't received government funding, but they've been able to tap credit lines. They've been able to sell, or they've been able to raise debt through other means. So part of my philosophies in investing is I always tell people you want to buy 1,000 shares. And it's no different here. If you can get 1,000 shares, that'll be fine. But if you can't get 1,000 shares, at least get 100 shares. I do not recommend people buying 50 shares, 20 shares, 10 shares. If you only got enough money to buy 20 shares in something, then I think you shouldn't buy shares in that stock, and you should find a stock that holds the same type of value, but that has a lower price, so you can get yourself enough shares, so you can see a return on investment. Right now, talking about if you have at least $2,000, you can get at least 100 shares in Carnival and Norwegian. And obviously, in order to get 100 shares in Royal Caribbean, you would need at least $3,500 to $4,000 because of $3,500 to $4,000 because of the way the stock price moves. But just like I talked about in the airline video, the cruise industry stocks, these three, typically move with the broader market. Okay, so normally information, the cruise lines will come out and say our revenues were down, profits were down, or our bookings are down, and the stock prices would fall. And they would come out and say, we're doing great, bookings are up, profits are up, and the stock prices would rise. In the midst of all this crisis stuff right now, there isn't a lot of information that's coming out that's good about the companies, right? So the stock prices have tanking 50, 60, 70%. So while the prices are at these low levels now, the question is, how are they moving, right? So if we look at Royal Caribbean, so we're gonna go back and we're gonna do a little. So we're gonna go back to early May, and we're gonna come down a little bit so I can give you guys a picture about how the stocks move with the market, which is what you can use as your gauge in these short-term spots to buy and sell. Okay, so on May 1st, Royal Caribbean stock price was $40.70, and the Dow was down 622 points. Okay, on May 4th, the next day was $41.31. May 5th, it was $37.20, and on May 6th, it was $36.11. The Dow was also down that day, 218 points. On May the 12th, the stock price was $36.34. The Dow was down 457 points. On May 13th, the stock price was $34.53. The Dow was down 516 points. And on May 14th, the Dow was up 377 points, and the stock price jumped to $35.15. On May 15th, the Dow was down 645 points, and the stock price bucked the trend a little bit because it rose to $37. But on May 18th, when the Dow was up 911 points, the stock jumped to $44.21. So the reason I'm showing you guys this, because you can use the broader markets as a gauge for short-time bursts in the stock prices, okay? Because right now, there's not a lot of news that's coming out. So how does Royal Caribbean stock price go from $40, go from $29 back in April, all the way down to $29, back up to $40 again, fall all the way back down to $34, jump all the way back up to $46, fall all the way back down to $40, and how does it keep doing this seesaw? If you go back and you check the historical pricing, if you go to Yahoo Finance and you check the historical data through the month of May, through the month of April, and through the month of May, you'll see the stock price has reached $40 maybe 2 or 3 times, and it has fallen back down to $33, $32, and it's jumped back up again. And if you look at the days where the broader market sold off or rose, for whatever reason, maybe the president came out and tweeted about some weird drug he's been taking, or maybe the Fed Treasury just came out and said that they believe the economy is going too bad, or some good news came out and the market sold off, Royal Caribbean stock price moved. And so during those times, you can buy in and get out. If you buy the stock at $34 and the stock goes up to $40, right, $6 or $7, that's $600 or $700 that you're making on 100 shares. Okay? If you own 1,000 shares, that's $6,000, $7,000 that you're making on every dollar hike in the price. Now, if you let the price, if you buy the stock at $30-something and the stock price goes to $40-something and it goes back down to $34, you don't make any money. You only realize gain when you sell it. So the idea in the short term is to move in and out of these stocks as the broader market pushes the prices up and pushes the prices down, right? Until the markets get under a lot more healthy footing underneath it that allows the prices to have a steady rise, which we will then see a turnaround. That's not really the case right now. So, and you can also do the same thing with Carnival Cruise Line and Norwegian. Although they don't have as much volatility as Royal Caribbean has, right? Right now, Carnival stock prices is moving between $12 and $14 to $15 a share. Norwegian stock price is moving between $10 and $15 a share. That's kind of like the range as of right now. Now, does it mean it'll stay in that range? No. So it can break out of that range pretty much any given time, depending on the information that's coming out. But right now, those are kind of the ranges. So if you see Carnival Cruise Line is kind of falling with the broader market and it's down at $10 and $9, that's pretty much a good buy-in. And if it jumps back up to 14, 15 with the broader market, you can sell it and you can take the money off the table. Same thing with Norwegian. So these short-time bursts in the prices are just for people to, I like to say, learn how to view the markets, learn how to trade within the markets. You know, it teaches you. If you just buy something and let it sit for the long haul, I don't see the lesson in that. I don't see what you learn just by buying it, letting it sit for 5, 6, 7 years or whatever the case may be, never looking at it. You don't learn anything from doing that. And one of my biggest pet peeves is that people should be actively involved in their portfolios. Active doesn't mean you have to watch it every single day. Doesn't mean you have to spend every waking moment on it. It just means that you need to pay attention, and when you see something, you know what you're looking at. All right? So if you guys got any questions about any of these videos you see, you guys know I talk fast, so I'm a little bit ahead of you, which may be the case. Just send me another question, and I'll be as more detailed as I can. All right, you guys, this is your boy Wall Street. I'm out.